Good day to everyone. My name is Tan Yin and my metric number is 01DAT23F1010. Me and my friends will present about the problem case for the subject Malaysian Taxation 2. So now I will answer for question A, which is computation of tax payable for the year assessment 2024 for Zentex Solution Berhad. The net profit before tax is 510,000. We have to plus it with non-allowable expenses, which is company annual dinner, it is allowable. Gift to client, branded merchandise, it's also allowable. And then managing director insurance, which is 40,000. It often considered a personal benefit or a capital item, so it's not an allowable day-to-day expense. And we have to plus with approved donation to Mara Education Fund, which is 30,000, depreciation 200,000. This is a big one. Accounting use depreciation, but tax law use a system called capital allowance. So we remove the accounting depreciation to replace it with the tax version letter. Repair damaged office server, it is allowable. Office renovation is 45,000. It treated as a capital improvement that enhanced the value of the office, not a routine repair. Therefore, it's added back. And software license renewal, it is allowable.
Hi, my name is Narmata Anapampuan Krishnan and my metric number is 01D8023F1026. So I'm going to take over the presentation from the non-allowable expenses, which is write-off bad debts. It is allowable because specific bad debts that are proven to be irrecoverable are deductible business expenses. Next is salaries for technical staff. It is also allowable because salaries and wages paid to employees for their work are fully deductible operating expenses. So in total, for non-allowable expenses, we will get RM 315,000. Next, we have to minus the double deduction. So under double deduction, we have training expenses for staffs, which is HRDC claimable, and the amount is RM 60,000. And then salary for OKU staff, which is RM 36,000. Next is approved R&D expenditure, which is RM 180,000. So we need to add training expenses for staff and salary for OKU staff in double deduction because this promotes upskilling and inclusive employment. And for approved R&D expenditure, it is included in double deduction because this is a reward for innovation and development within the country. So for double deduction, in total we will get RM 276,000. Next is we have to minus non-business income. Under non-business income, we have dividend single tier, which is RM 60,000, and government grant for R&D, which is 100,000. We also have foreign exchange gain realized, but it is exempted. We need to add dividend under non-business income because it is single tier system. This income has already been taxed at the corporate level and is tax free in the hands of the recipient company. For government grants, it is often considered a non-taxable capital receipt meant to fund specific project, not as trading income. In total, for non-business income, we will get RM 160,000. Next, we need to calculate adjusted income. For adjusted income, we need to take the value of net profit before tax, which is RM 500,000. We have to add with non-allowable expenses, which is RM 350,000, minus with the value of double deduction, which is RM 276,000, and then at last we need to minus with the value of non-business income, which is RM 160,000. So in total, we will get the adjusted income, the value of RM 389,000.
Good day, madam. My name is Anjali Annaprabha Pattaraju. My metric card number is 01D8023F1028. After the adjusted income, I'm gonna present the rest. Adjusted income 389,000 should minus with capital allowance because this is the tax deduction for wear and tear on business asset like computer and vehicle. First computer, RM 150,000 times with 20%, we will get 30,000. And second office equipment, 100,000 times with 10%, we will get 10,000. And lastly, motor vehicle, 120,000 times with 20%, we will get 24,000. So overall, Zentech claims RM 64,000 for asset purchase this year, and then minus with unapproved capital allowance, which is 50,000, also known as unobserved allowance from previous year, which is losses from before to use up. Next, adjusted income 389,000 minus with 64,000 and minus with 50,000, we will get statutory income RM 275,000. And then we should add add other taxable income, which is first dividend single type is exempted, next government grant for research and development 100,000, and lastly foreign exchange gain realized is also exempted. So the overall taxable income is 100,000. Next, statutory income 275,000 plus with 100,000, we will get aggregate income 375,000. And then we should minus with donation to Mara Education Fund, which is 375,000 times with 10%, and then Alliance 30,000. Okay, we should take the 30,000 because they donate 30,000 to Mara, which is within the limit and it's fully deducted. So the aggregate income 375,000 minus with the donation 30,000, we will get chargeable income 345,000. And lastly, tax payable computation, chargeable income 345,000 times with the taxable rate, which is 24%, we will get 82,800.
Next, question B. Discuss 5 tax planning strategies to help Zentech reduce its tax liability, including supporting calculation and reference to provisions under Income Tax Act 1967. So, number one, the strategy is accelerate capital allowance claims. The explanation is the company should consider disposing of and replacing old asset to realize a balancing charge. This will absorb the current year profit and utilize the existing unabsorbed capital allowance more effectively. A balancing charge is treated as taxable income, which can be offset by the company's substantial unutilized capital allowance and current year capital allowance, thereby converting a future deduction into an immediate one. For estimate tax saving, realize a balancing charge of RM 5,000 to fully utilize the unutilized capital allowance. Unutilized capital allowance use are RM 50,000. And for saving calculation, we need to um, multiply RM 50,000 with 24%, and in total we will get RM 12,000. Number two is claim double deduction on expert promotion. Explanation: under Schedule 3, Paragraph 4B of the ITA 1967, expenses incurred for the promotion of export, for example, participating in overseas trade fairs, advertising in foreign media, conducting market research abroad, are eligible for a double deduction. Since Zentech is actively exploring international clients in Singapore and Indonesia, it should meticulously track and claim all such related expenses. For estimated tax saving, the calculation are the company spends RM 150,000 on participating in a tax fair in Singapore and associated marketing. Additional deduction is RM 150,000. So for tax saving, the calculation is RM 150,000 multiplied with RM 24%. So in total, we will get RM 36,000.
Okay. Next, third, optimize tax incentive for export of services. The explanation is the company is exploring international clients under the income tax exemption. Number 11, Order 2005, a company can get a 70% exemption on statutory income from the export of qualifying services. This means only 30% of the export profit is taxable. The company shall formally segregate its international and domestic sale to claim this incentive. So the estimate tax saving is 30% of sale, which is Rm 1,650,000, are export services with a PBT margin of 50%. Export profit equal to Rm 1,650,000 times with 50%, we will get Rm 247,500. The taxable export profit is 70% exemption equal to 30% times with 100 247,500 equal to 74,250. So the tax saving is equal to 247,500 minus with 74,250 and times with 24%. We will get 41,580. For the fourth, increase double deduction for OKU employees. The explanation is the company already employs an OKU staff. Schedule 3, paragraph 34, subsection 3 and H of the ITA 1967 allows a double deduction on the salary for registered disabled OKU employee. Hiring more OKU staff is direct and efficient way to reduce taxable income. So the estimate tax saving is hire on one additional OKU employee with a monthly salary of 3,500. Annual salary will be 3,500 times with 12 months is equal to 42,000. So the additional deduction will be Rm 42,000. So the tax saving will be 42,000 times 20% equal to 10,080 ringgit.
Fifth one is prepaid qualifying expenses. For companies that anticipate higher profit in the following year, prepaying certain allowable expenses before the year end can shift the tax deduction into the current year of assessment. This is governed by the Section 33 subsection 1 of the ITA 1967, which allows a deduction for expenses incurred in the production of income. Prepaid expenses, for example software license, insurance, training, are deductible if the related service is to be rendered within 12 months. The estimated tax saving is prepay 80,000 for a 12-month software license renewal due in January 2025. Additional deduction in year of assessment 2024 is 80,000. So the tax saving will be 18,000 times with 24 percentage. It will be 19,200 ringgit. So this is the reference for this case study. In conclusion, effective tax planning enabled Zentax Solution Berhad to optimize its tax liability while remaining fully compliant with the provisions of the Income Tax Act 1967. Through proper application of double deduction, utilization of capital allowance, and claiming available incentives for export services and OKU employment, the company can significantly reduce its taxable income and improve cash flow. Strategic prepayment of allowable expenses and continuous review of tax benefits further enhance its overall financial efficiency. Therefore, proactive and well-planned tax management plays a crucial role in sustaining business growth and ensuring long-term tax efficiency for Zentex Solution Berhad.